Hi, this is Randy Finney with the right side of the chart, and today is Monday, June 20th, 2016. It's about quarter after 10 Eastern Time, and I just wanted to take a quick look at the U.S. markets. Nice move up today, and I wanted to do this video, again, get it out quickly and just take a look at some of the indexes, where we're at and what I expect to happen. I'm still looking for a gap fade by hopefully within the first hour here. My expectation, as you can see here, we're at the 44.38. It's a key level in the NDX. I posted it last night. You have the 38.2 fib comes in perfectly with a very well defined resistance level. You can see numerous reactions here, here, here. There's a gap, reaction from a below, above, gap over here. So that's a key level, and when you're trading the 60-minute charts, you want to see a 60-minute close. So the first candlestick was finalized at 10 o'clock Eastern Time. You have the first 30 minutes of trading, since there's 6.5 hours in a trading day. So this next candlestick will be finalized at 11 o'clock, and my expectations will probably close back below that 44.38 level. Intra candlestick breaks don't mean really anything. It's where the close that I'm looking for. We're trading a 60-minute chart here, so all that really matters is the 60-minute close. And let's see what happens. So that's my expectation, is that the Qs will likely stop here. Some of the things that go into my thinking, of course, are the recent confirmed divergence on the daily time frame. You have, if you look down here on the trend indicators, we're still bearish, well in the bearish territory with this 1333 trend indicator, with the MACD trading below the zero level, still well below. So that's the NDX. And let's take a look at some of the components of the Qs. This is, as I always say, this is what drives the NASDAQ 100. So we have Apple. Here's Apple, clearly still in bearish territory from the trend indicators, clearly in a downtrend. So today's price action, is as impressive as it might seem. I often hear that when the market's up, people say, well, it seems like this market just wants to go up, and the market's trading down. People get bearish, and it seems like the market will go down forever. So most importantly in trading, did anything change, technically today? The SPY did get above my first resistance level that I had, and by quite a bit. But again, we're looking at the NDX, and we'll tear it down here and just take a look at the components. So what happened on Friday? We had Apple come down here and close, almost make a perfect tag. This is a level I had up on the chart. You can see I did a video on the top 10 holdings in the NASDAQ recently. And so there was Apple, pretty much found support here at this line that I've had for a while. This is a pretty well-defined support level. And there's a gap, reaction. So the trend is down, as you can see, since Apple broke down from both this primary, on the 60-minute chart, this primary ascending price channel and then the smaller price channel. It's been moving lower since. This is a support level, first visit here. So, I define a reaction as either a bounce and or consolidation. So far, all Apple is doing is consolidating around that level. Trend indicators remain bearish. So, a bounce here, even if we go a little higher, is still likely, or still possible. There's the pretty solid resistance level there, 98.67. So this would be the first level that I'd really be concerned with if Apple took that out. And you can also draw a downtrend line, as you can see here, or really take a parallel line and make that a descending price channel. So there's what's going on with Apple. It's in that channel. So to back up on my previous statement, the first bullish technical event in Apple would be break above this trend line, and then a break above that horizontal level there, and then the next level there is about 132. So so far nothing in Apple has changed from a technical picture. Google, there's class L. Let me look at the class alpha. I keep referring it to Google. Here's Alphabet. This was a level. Remember on Friday I expected, I drew a little reaction. This was my target from all the way up here when we were still within the wedge. Expected a wedge break. Already went over this. Every level that I had there had a reaction. And I expected a reaction here on Friday. And we had a muted reaction. And this is how I had it drawn. So this is a more typical, after such a large move down, my expectation is Google, this was that former support level, now resistance, 703.50 we'll call it, and that's a likely stopping point for Google. And that would be healthy to see that after such a move down, but nothing in here other than we do have a potential bullish cross here on the MACD, but it's still well below the zero line, and the trend remains bearish there. So there's Google. We'll go look at Microsoft. Microsoft, this is a key level here, 49.46, and so nothing but a reaction so far off that level. But you can see there's a pretty big gap right here, and Microsoft, to really change anything technically would have to get above this level. Now, again, to firm up the bearish case, support is support until broken. This is a level I think goes within the next week or so, probably this week. But until that happens, it's Microsoft is in a sideways trading range, and you really can't take too much more out of that. So the next big direction, a breakdown below 49.46. And when you look at it from the bullish perspective, okay, what would be bullish technical events? First, a break above, backfill this gap and take it out. So break above 51.27. Then you have another support resistance level here, 52.08, and then a big one here at 53.04. So until then, again, I'm viewing this as just a natural bounce off support, just a follow through to really the support levels that we hit on Friday. We had such a muted reaction, and so far that's all this is. But nothing's changed technically. Amazon, this one, that 723 level I mentioned is a pretty key level. Again, this has been updated quite a bit. So you can see here we're moving down. Since the break, we had this wedge break. Prices made a marginal new high, broke below this trend line, and have been moving lower since. And until and unless we get back above 723, this is nothing but just a zigzag, if you will. Just it's impressive 1.5% bounce, but no more impressive than the 1.5 or 2% drop that we had here. Again, bigger picture, nothing's changed. Trend indicators remain bearish, and that's really the theme of this video. Here's Facebook, still moving down. That was at key level. Remember, this was an island cluster top pattern here, also viewed on the daily chart. You had this cluster. We're looking at a 60-minute chart now, but on the daily chart, you'll see just a cluster of candlesticks. And the base of that, the bottom of that island cluster top was 116. We gap below. And until and unless we get back above 116, nothing's changed. Again, what I'm trying to impress upon here is the bigger picture. Here's a bigger picture in Facebook. There's also a break below this trend line, this large wedge. We're well below that. We're below the island cluster top. And I'm just trying to say, don't get too excited because the market's up, 1.5%, until and unless they start taking out technical levels. And that's how it works. It's just, there's not any one level that flips everything from bullish to bearish. It's just a series of support and resistance levels. In other words, as each resistance level is taken out from below. And again, you got to look at the big picture. I'm not just referring to Facebook. You look at the broad markets, you look at the SPY, the QQQ, the small caps, and if and when each resistance level gets taken out, especially in all of those, and that's another thing I always talk about, don't ever focus on any one index. So today the S&P is quite bullish, taking out that level I was expecting a reversal at. However, the Qs are still failing so far at that first resistance level. And as I talk, the NDX is at 44.38, which is that resistance level that I was referring to. So that's that. I won't go through them all. I just wanted to mention right now, I don't see anything as bullish as this might feel, and it may certainly morph into something more than that. By morphing into something more than that, we'd see trend indicators, particularly on the broad markets, flip back from bearish to bullish. When you see this 1333 histogram, you want to see a cross back over. And for those not familiar, if you're new to the site, this is just a histogram I've created that shows it's a differential between the 13 and 33 period EMA on the 60-minute chart. So if you had a pair of exponential moving averages here with a 13 and 33, when they cross over, when the when the 13 crosses above the 33, that's a bullish crossover, and this goes green. And then when the 13 crosses back down below the 33, this shows you where that cross occurred, and it shows you if it's red, the 13 is trading below the 33. And as you can see, and I've gone over this many times in the past, it does a pretty good job as well when you use it with other trend indicators. Like I said, one of the most simple and yet effective is the MACD with the 9 EMA trading above or below the 0 line, this dotted line. And just as it showed back here, we were bullish all through here, bullish on the trend indicator, bearish here when across. That's what these boxes represent. You can look above and see that it captures the bulk of the trends on this time frame. So can we push back up and take out these resistance levels? We're looking here on the Qs. For those of you that are trading the Qs, 108.46 has been for a long time a pretty key level I've watched. You can see numerous reactions there. You can see a gap back here. You can see reactions quite a bit on this chart, but that's what we're looking at. So if that goes, as well as some of the levels on the small caps, and then we could start flipping over to some bullish signals here. Let's see. There's a level. I'm trying to show you a good level on the small caps. Okay, I captured that reaction high. There's a gap there, and that's where I would put this line. So this would be a pretty key level. The small caps are really where, as far as broad market shorts, that's where I have most of my exposure, because I think there's more meat, if you will, on the small caps right now than some of the other indices, especially the S&P 500, which is full of dividend-paying stocks, very diversified. So 116.70, if you're looking for a level that would cause concern, in my opinion, for the bearish case, would be taking out 116.70. And if that goes, then you're looking at a backfill of that gap, and I would probably put the resistance at the top of the gaps a little bit higher. You could put it up there. That's where prices closed before, and that is, call it 117.60. All right, so there's the levels. That's what I'm watching, and we'll see how the day ends. This has been Randy Finney with Right Side of the Chart.